Hi and welcome to the Market Alert for Thursday, the 21st of July 2022. So yesterday the inflation numbers were released, and according to the headline news for yesterday morning, 40-year high of 9.4% as cost of living crisis mounts. We know it's a lot higher than this for every individual because of the increase in energy prices, fuel prices and food prices. So where they get 9.4% from in the real world is utterly ridiculous. It's a lot higher than this, and we all know this, but of course it's easy to manipulate the numbers when you only add certain things to the basket of goods that they actually calculate this on. So interestingly enough, comes out the same as last time, which is slightly higher. In fact, let's just have a laugh and have a look, see what it was. It was 9.3, wasn't it? It was forecast. Previous 9.1, so 0.3. Wow. Yeah, incredible, isn't it? Other news, big tech and Bitcoin jump, bonds and bullion dump as housing market slumps. The short squeeze continues. That's talking about the stock market moving prices to the upside. They're up on the overnight as well, despite being down yesterday when the Dow opened. Big one today, ECB preview, first rate hike in 11 years and another major policy mistake. And after standing pat on rates in June, the ECB is finally set to pull the trigger and commence its rate hiking cycle for the first time since June 2011, when it sparked a sovereign debt crisis and cut rates 3 months later. Yeah, it'll be the same as the US if they actually go ahead and do it. As I said before, it's just it's staggering that you can say inflation, if you take it at face value, of 9% or 10% in Europe, and they're just going from 0 to 0.25%, and this is 11 years later. Amazing, isn't it? You've got no chance of stopping inflation with that sort of rate increase. Wall Street shrugs off European geopolitical concerns with tech underpinned by Netflix. Complete and utter nonsense that is, isn't it? And this Italy government on verge of collapse after coalition members abandon Draghi. Euro tumbles. Goodbye, not so Super Mario. No, this is the man who was part of the ECB, was the head of the ECB. Goldman Sachs banker was his first job, put into the ECB, destroyed the whole of the system there, and now they're getting rid of him out of Italy as well. Davos man as well. Amazing, isn't it? All of these things are inextricably linked. Somebody that will do the dirty work for the elite. Right, so news. We've just looked at this. Apparently, at 1:15 p.m. today, after 11 years, the ECB are to raise rates by 0.25%. This will be interesting to see how the market reacts to this, because it's so long ago in Europe, I can't remember what actually happens. I suspect that the stock market will go up initially on this and then sell off. But so we'll just have to wait and see. Then there's a monetary policy statement that's going to come from Lagarde, head of the ECB, another criminal, an official criminal as well. Look it up if you don't believe me. Fully fed manufacturing index and unemployment claims from the US, and then we've got another conference from the ECB at 1:45 before the Dow opens. So Lagarde speaking once more. And the gold-silver ratio managed to move lower over the last couple of days, but starting to move to the upside. Look at this in more detail. The slamming gold and silver is not over, and that's going to take a hit today as well with that increase in rates if they go ahead and do it. So back to the markets, and you can see that over the last couple of days the Dow has continued to move to the upside. A bit smaller in range yesterday. We've got resistance to the left where the market is at the moment, and I suspect they're going to try and keep this going as much as they can. We've taken out all of the other highs in between, which you were seeing there, and we need to draw in some further fibs to the upside. So from here down to here will bring us to this level here. Let me just get rid of this one so we can see we're at the golden ratio at the moment for the major swing. From here, not quite from the top, from there back to there at the moment is 62% retracement. Even if we go from there to there, it'll bring us back to the 62 as well. So the Dow has been moving higher, taking out the retracements after putting in its 89% retracement and taking out the 31,508 and continues to move to the upside despite inflation, the war, and all of the other uncertainties that we've got going on. So again, nobody wants to sell at this point in time. It's a buyer's market, as we're seeing with the prices here, unless they're just marking it up. Yesterday the market moved up, came back 89%, went back 89%, came back 62, 50% overnight, and now above the DP and the close, the 50 EMA, the 20 and the 5 above the 20 there, and moving nicely to the upside. So from there to there, you'll see prices just heading towards the 78, 89% retracement. So coming off that DP through the three main fibs, 38.50 and 62 there, to head to that 78.89. Meanwhile, in the DAX, a bit of supply in the market yesterday, but this too trading up to 78% of a recent move from there back to 78. We're stuck at the 50 EMA as well. This needs to be taken out. We've got, like I say, there's some supply there, so there's some absorption of selling coming into the market, which is probably why we're seeing the market moving to the upside. 78 and 89 needs to be taken out, as does the 50 EMA and also the high of yesterday as well. So let's look at this in more detail in the 30-minute chart. Again, like the Dow, you can see yesterday afternoon the market down, then back up and then back down, settling at the DP overnight. This is the DP for yesterday. We've got the retracement in there and now breaking through the DP and making its way back up to yesterday's high. ECB at 115, so they're going to run the market this morning, aren't they? They're going to run it to the upside, back to the high, so they've got something to take off in the event of the rate rise going through. If it doesn't go through, the market will tank. So I suspect the fact that they've already front-loaded the market with this increase, we will see a bit of volatility on both the up and the downside when they do this. 5-minute chart for yesterday. I didn't trade yesterday, I was travelling back. Let's just squeeze this up a bit. And you can see that the futures market was very quiet. Pre-market, then the cash market opened, sold off, became oversold. Market rebounded and then traded back up to the high of Tuesday and then sat there. And then the market sold off at, what time is this? 11:35. For some unknown reason, the market saw some weakness and then saw another round of weakness that we see here before the market then made its way back to the upside. Once the Dow opened, we saw a bit of a bit of strength actually here, and then moving to the upside. So this 11:35 or 1:35? 1:30. Oh, so this was economic news yesterday. That's what that was. And then the market reacting to it and moving back to the upside. And then as the evening went on and the Dow was moving up and down, those 89% retracements, you can see the DAX following, but in a far lower percentage. And overnight prices trading back up and heading back to the high, which we've looked at in the 30-minute chart. We've got a few other things to take out in between the R1 and of course all of the physical resistance, but let's face it, from here 100, 200 points, which is quite normal these days for the German DAX. In the S&P, this too moving to the upside. As we can see here, we've got to come from here down to here. This takes us to 62% retracement as well. We've got the supply coming into the market. The difference here though compared to the DAX is that this one is already trading above the 50 EMA, and again you can see the absorption of volume yesterday as well. So 62 isn't going to be much of a problem as we head up to the 78, 89 in the daily chart, unless something comes out of the blue to send this latest short squeeze back to the downside. 30-minute chart yesterday, not too dissimilar from the Dow, except the retracement is less, coming back, and then 89% on the upside as the market has found support at the DP level overnight with demand divergence, as can be seen there, and the market now moving back to the upside. So from here to here, again, we've got 78% retracement at the moment for the S&P, but all eyes, like I say, fixed really on the ECB rate announcement coming at 1:15. FTSE trading up towards the 200 MA there, but you can see from here down from there to there, we got just through the 89% retracement, but again absorbing the selling that came onto the market yesterday, and prices need to close above the 50 EMA and also the 78% retracement. Watch that 200 MA as well. You can see what happened last time, sent the market lower, not because there's a 200 MA there, but the traders will be aware of it. It's one that is used by the institutions. And the 30-minute chart showing the selling coming into the market there, and then a slow grind down with demand coming into the market, which you can see there as well. Overnight, the previous day's low is tested, and it's oversold, and the market now trading back up to the DP. I need to get through this DP level, and if we look at the upside, you will see from here down to here, the market is at 78.89 at the moment. If that one's taken out, we'll draw in from there to there, and then just keep working back as prices move towards yesterday's high. Again, waiting for the ECB news there. And in the yen, moving up nicely. The dollar has been moving down over the last few days, having a bit of a breather, and the yen has moved higher in response to this, which you can see there. Currently at 89% retracement from here back to here, having taken all of these other retracements out. It's just the 89 to take from there. And again, what I would do is just move from there to there and from there to there if this happens. 30-minute chart, very choppy during yesterday morning, eventually then moving to the downside, a bit of dollar strength, market coming back, retracing there, overbought, and then coming back towards the oversold with a nice retracement, and then moving up overnight. So again, you can see a bit of volatility in this bar, nothing to shout about, it's only about 50 points, but bouncing off this above the DP and moving to the upside as well. In the pound, hit a bit of a brick wall yesterday. We had the inflation numbers that we've seen. We got 2 days where they've been trying to absorb the selling coming into the market, and the dollar down on the overnight at the moment, pushing this, and also, of course, the threat of another interest rate increase coming this month from the Bank of England as well. And in the 30-minute chart, this is the reaction to the inflation numbers yesterday morning. First down, then up, and then a move to the downside as Bailey spoke during yesterday, and the market's now making its way back above the DP there as well. So everything at the moment moving towards the upside, apart from the US dollar, which we'll take a look at now. And when I say everything moving to the upside, apart from the fact, we start off with the dollar just as a focal point. You can see that if I get the right chart, there we go. You can see that the dollar has been moving lower for the last few days, which is interesting. And of course, this is played well for other things, except for the metals. As we go to the silver market now, you'll see that yesterday the market was slammed, and we're going to continue lower, as I've said before. We're not done yet. We're going to take out this low here. I'll just draw it in. I can get this to, there we go. We're going to take out this low here of $18 an ounce, and then we'll continue down towards the 16 in the monthly chart, and we could get as low as 15, 14, 50 as well if they really want to slam it, just as they did in 2020, because that's the way it's going at the moment until they stop increasing interest rates and the dollar starts to collapse. This is just a pullback in the dollar. We've got more rate increases to come next week. Wednesday, 1 basis point, 100 basis point I should say, or 1%. So dollar having its classic pullback before the rate increase, is what we're seeing there. But you can see again how they're using this, and they're just sending the price of silver to the downside. Yesterday we saw a bit of a move, allowed to trade above $19, then it was slammed all the way back 50 cents, finding a bit of support at the moment. But like I say, don't hold your breath. 1 p.m. fix. And gold also still continuing to be hammered to the downside there, making a new low last night, and now below $1,700 an ounce as well, which was there, slammed through. Sorry, it's here, isn't it? It's that red line there. There we go, that line there, and still slammed through, as you can see there. And now a dollar. Where are we? This is going to be $16.90, $10 lower there as well. Finding a bit of support there at the moment, and on yesterday's low. Whether they can bring it back, who knows? But the metal is still being absolutely hammered, and they've not finished with this yet, because it's the last thing to go up when everything else starts to fail. As in the US dollar continuing to move to the downside. I mean, there you go. Look, it's moving down, and the metals are still being hammered. Meanwhile, crude oil remains above the $100 per barrel, 106, got resistance there, 89%, well, double top retracement, that is, hanging on to the supply there. If it moves higher, see the fuel price is going back up again, down at the moment, which is a bit of a relief, but nothing where they should be because of the fact that crude oil is traded in US dollars, which was kindly pointed out to me by one of the subscribers, which of course makes perfect sense. So that's it. Let's see if the ECB have the balls to increase interest rates today. I suspect they're going to, because they put it out there and made a big statement about it. So Lagarde is going to do that today, and we'll see what the market's reaction is following this. Okay, that's it for this one. Of course, unless they throw in a surprise and increase it by 50 basis points, which I very much doubt, given the fact that it's taken them 11 years to actually increase it by a quarter of 1%. Anyway, we'll see what happens. Okay, that's it for this one. Glad to be back, and let's see what happens at 1:15. So as ever, thanks for watching. See you in the next one.